Tesla stock, love it or hate it, you can't ignore it. TSLA took another dip, grabbing headlines and making investors sweat. The drop wasn't catastrophic, but it was enough to spark debate. Is this a warning sign or a buying opportunity? Tesla's volatility is legendary, and today's move traces back to, you guessed it, Elon Musk and his latest social media storm. For seasoned investors, these swings are almost routine. The real question is, what's driving the drop this time? Was it earnings, competition, or Musk's mouth? Spoiler, it was the latter. This is a classic case of how one person's words can move billions in market value. To figure out if this is a red flag or a discount, we need to dig deeper, look at the cause, compare to past dips, and see what the pros are saying. We'll break down Musk's comments, compare this dip to the last big one, and focus on the real story, Tesla's robotaxi future. By the end, you'll know if today's drop is a reason to worry or a chance to buy in. So, what set off this latest sell-off? Over the weekend, Elon Musk blasted a new Senate tax and spend bill on X, calling it utterly insane and destructive. He claimed it would destroy millions of jobs and harm the country. Bold words, even for Musk. He didn't stop there, warning Republicans that supporting the bill would be political suicide. When a CEO gets this political, investors get nervous. It's not just about opinions, it's about risk. Musk's comments can alienate customers and anger politicians who control key regulations and incentives for Tesla. Suddenly, the focus shifts from cars and tech to controversy and unpredictability. Investors start pricing in CEO risk, the chance that Musk's words could trigger boycotts, regulatory headaches, or just plain distraction. So when markets opened, some investors bailed and the stock dipped. Musk's outspokenness is a double-edged sword. It builds the brand, but it also brings volatility. Why do Musk's tweets move markets? Because with Tesla, the CEO and the company are inseparable. Musk isn't just a leader, he's the face, the vision, and the story investors buy into. When he wades into politics, it's not just personal, it's business. His words can impact regulation, subsidies, and even Tesla's access to global markets. The market hates uncertainty, and Musk's unpredictability is a wild card that's impossible to model. Investors now track not just Tesla's numbers, but Musk's social feed, bracing for headline risk. The recent dip was the market pricing in this added uncertainty. For many retail investors, Musk's persona is part of the appeal or the risk. When controversy erupts, sentiment shifts, and the stock can swing wildly, regardless of fundamentals. With Tesla, the CEO's behavior is as much a market driver as the company's products. To understand today's dip, rewind to early June, when Musk's political outburst triggered a $150 billion wipeout in Tesla's value. That was a wake-up call. Wall Street showed there's a limit to what it'll tolerate from Musk. After that, Musk dialed it back, and investors adjusted their expectations. So when he doubled down this weekend, the shock was gone. The market had already priced in the Musk effect. This time, the drop was smaller, a ripple, not a tidal wave. The political landscape had shifted too. Trump, once a source of tension, called Musk a wonderful guy, easing fears of political fallout. Investors remembered the June recovery and were less likely to panic sell. The initial dip was mostly short-term traders and algorithms. Long-term holders saw it as a minor discount. The market is learning to filter Musk's noise from Tesla's signal. The focus is shifting back to fundamentals and the company's future. While retail investors obsessed over Musk's tweets, Wall Street's pros mostly shrugged. Analysts have already baked Elon being Elon into their models. They see these flare-ups as noise, not a change in Tesla's long-term story. Their eyes are on the real catalyst, the upcoming robo-taxi rollout. Firms like Deepwater Capital say all that matters for TSLA now is the pace of the robo-taxi launch. William Blair echoes this, noting that while Tesla faces tough competition and slowing sales, the robo-taxi opportunity could override short-term headwinds. Their advice: use dips like this as tactical buying opportunities if you believe in the long-term vision. For the pros, it's about betting on Tesla's tech, not the CEO's tweets. Why is everyone so fixated on robotaxi? Because the potential is massive. Tesla could transform from a car maker to a global mobility platform. Imagine fleets of autonomous Teslas summoned by app operating at a fraction of today's ride-hailing costs. For investors, this means recurring high-margin revenue, not just car sales. Every Tesla with full self-driving could become a money-making asset, turning idle cars into cash generators. This is why investors look past the drama. Robotaxi rollout, teased for later this year, is the single biggest catalyst for the stock. If Tesla pulls it off, it validates their AI approach and puts them years ahead of rivals. The upside is so huge it dwarfs the risks of a controversial tweet. That's why long-term investors are willing to ride out the volatility. Tesla's Xi core car business faces fierce competition from legacy automakers and aggressive Chinese rivals. The days of Tesla dominating the EV market are over. Now every sale is a fight. The next delivery report is expected to show a year-over-year decline, a red flag for a growth stock. If demand for Tesla's current lineup is plateauing, growth could stall before new models arrive. The robotaxi dream itself is far from guaranteed. Regulatory approval is a huge hurdle, and any high-profile accident could set the project back. Full self-driving isn't perfect yet, and safety concerns remain. These are not minor risks. They could delay or derail the robo-taxi rollout. Investors must weigh the long-term promise against these real, immediate challenges. The road to autonomy is full of obstacles, and success is far from certain. Analysts like William Blair see the current dip as a tactical opportunity. If you believe in the robotaxi vision, a price drop from a tweet or weak quarter is a discount, not a disaster. Their advice: use volatility as a chance to buy in for the long term. Some firms have price targets well above current levels, reflecting their bullishness on future projects. Of course, forecasts aren't guarantees, risks remain. But if your time horizon is years, not days, the daily drama matters less than Tesla's ability to innovate and execute. The real story is about long-term growth, not short-term noise. For believers, this dip could be the perfect entry point. So, is today's drop a red flag or a green light? For many analysts, it's a buying opportunity. The dip was triggered by Musk's political commentary, something the market is learning to tune out. The real driver is Tesla's future as an AI and robotics powerhouse led by the robo-taxi network. If you believe in that vision, buying on dips caused by non-fundamental issues makes sense. The risks, competition, slowing sales, and robo-taxi execution are real, but so is the upside. Ultimately, it's about your risk, tolerance, and belief in Tesla's future. Today's drop might just be your ticket onto the Tesla roller coaster before the next big climb. Remember to like the video and subscribe to the channel for more videos like this.